Today is October 31st, 2014. And my Halloween costume today is Saul from Better Get Saul from Breaking Bad. And actually, there is a segue with Breaking Bad and Silver and QE that's relevant. Let me explain. Let's say that they do QE. And in this QE, they give $10,000 to every meth addict in Breaking Bad. Now, where's that money going to end up? It's going to end up in drugs. Why? Because when you create QE, or when the central banks create QE, it's not going to every single person out there. It's going to a few places. And those few places will take that money and do with it how they please. So if you create QE and you give it to meth heads, they're going to buy drugs, right? So they create QE and they give it to banks. They're going to put it where they want to put it, and you might not see the entire, it's not going to be spread out over the entire economy. It's going to go to certain places. Okay, so silver did see this 15s today. Right now it's over 16. Silver and gold had two big down days, but the other precious metals didn't. Palladium's even up a little bit. Platinum is down only a hair, and rhodium didn't move. So what's happening today with the precious metals is a gold and silver precious metal phenomenon. It's not a across-the-board precious metal phenomenon. It's like kind of like a monetary metal phenomenon. So what's happening there? Well, what else is going on? Oil is down. Oil's been going down. And there is a big correlation between gold and oil. I say correlation, meaning that they don't always move in step, but you look at the two charts, there's a big correlation. And I've read theories about the price of oil and the price of gold, why they're linked. There's certain formulas that central banks use or whatever, and I can't really attest to those theories, but I can say that I see a correlation between oil and gold, and plummeting in oil and plummeting gold often go hand in hand. And of course, the price of silver follows the price of gold a lot as well. So that's one thing that could be happening. Another thing too is the GDX, the gold mining index got slammed in the last few weeks. Pow! The GDX is, I mean, to see these low levels, you got to go back years, like what, 2008 or something like that. So you have the price of these mines going down. Now, was the price of these mines going down kind of like a predictor of the price of the metals going down next? I know what happens with mines, right, is that if there's a huge surplus, right? Right now, with the Silver Institute, they did a report, and it shows that there's a lot of silver around, and that there's a lot of extra silver around, and what that means is that you could go for a period of time without actually needing new silver to mine stuff. And if price goes lower, it causes mines to go out of business. And the mine can keep going out of business and the price can keep going lower as long as there's excess supply at this price in the market. And then at some point, what happens is the excess supply gets used up and you got to get new supply. And if the miners are out of business, it could cause the price to go up like this kind of rapidly. But that's like, how long in the future will that happen? That takes like a lot of analysis and guessing. But I mean, look at 2008, 2009. Mines got smashed. Metals got smashed, and they were like that for a period of time. It wasn't an overnight thing, and then they went up. So as far as going up is concerned, I just had a call with a friend. We're saying, well, what happened with silver? It went almost to 50, and now where it's at now, we're talking about the market, and why did it even go past 30? Because if you look at what happened, you know, silver at 20 right now, if the price of silver had not shot sky high to 50, and silver was like 20 over 20 right now, I don't think that would be unusual. But because silver went to 50 and now it had seen 15 today, what's going on there? Well, what happens a lot of times is when the price is going like this, a lot of people buy who wouldn't ordinarily buy because the price is going like this. And then when the price starts going like this, people who bought because it was going up are now selling because it's going down. So whenever you see something that goes like this, it's almost always followed by this, is the people who bought up here sold down here. And this kind of blends into a second topic about the different players in silver. So one of my loyal subscribers, Cosmos Gatos, who leaves a lot of comments, and he's kind of like Yoda, or he's like Obi-Wan. I'm not sure which, because he's still a mystery man to me. But he's kind of like, I see him as like this guy sitting in a dark cave throwing me wisdom, right? There's someone in a dark cave, I don't know who they are, they throw me wisdom. And at first he would say things, and I didn't take him seriously, but then he said some things, like he said, you know, now is probably a good time to start buying stocks in the stock market, and that was when the market's here. And now it's here, and I said, well, that was pretty good. And he said some other things about the precious metals. It was here, and then it goes here. I'm like, well, that's pretty good. And then he sounds logical, so that's kind of why I reference him. But of course, you know, obviously, this is an anonymous person on the internet, so it's not like you should put your faith in them. But, you know, if they have a good track record, maybe I'll hear what they have to say. So he said that these, he says to traders, precious metals are a toy. And when they get tired of the toy, they discard that toy and look for another toy. So when it comes to silver, right, I think most people who watch these channels, they like stuff like this, or they like real things. And they have a certain outlook on the market. But the people who are speculators and are traders, you know, when it comes to a trader, obviously every human's a trader. You go to the market and you trade your piece of paper for some food, right? You trade your piece of paper for a piece of metal. At some point in the future, you will trade this metal for something else. So we actually all are traders. It's just that the label trader is kind of, you know, it's implied that it's someone who has an account and they're doing stuff with the charts and the graphs and they're pressing buttons. That's kind of what we have in our mind. So when I say trader, I'm kind of referring to that. I'm not referring to someone who's trading their paper, their paper for a coin and later trading it back. I'm referring to like the people with like these online accounts who are using the ETFs and leverage products and other things like that. So if you look at the ETFs, right, they didn't exist when silver was like $5 for 20 years. These things didn't exist. So to trade silver, you had to actually like trade this stuff, or you had to use a sophisticated trading instrument. And in the last few years, it's been so that you can be unsophisticated to trade these things. You just have to open an account by pressing some buttons, putting some money in, and pressing some more buttons. And that adds a lot of speculators who normally wouldn't be speculating in this thing, and it adds a lot more liquidity. The floodgates are open. It's like, you know, the shop is next to your house. You can just walk around the corner and go to the shop instead of having to get in your car and driving, you know, across the state. But so anyhow, looking at these ETFs, and yes, these ETFs are a big part of the market. People are saying, well, if it wasn't for these ETFs and trading instruments, silver would be a lot higher. No. When these ETFs and trading instruments didn't exist, and it was mostly, quote, a physical market, look what silver was for many years. It was a lot lower. So these other things add a lot of demand to the market that normally wouldn't be there. I mean, silver getting to 49, it was a lot of people putting money in. If you look at the silver, the SLV ETF, look at the volume. In 2000, the volume was like this. Now it's like this. So when the silver ETF came out, it was like this for years. And then it was like this for a period of time, and it was like this. And the price was up here, right? So if these things didn't exist, would the price have gone up here? I personally don't think so. So going back is these ETFs is, what would happen if these ETFs were dissolved? It could send the price temporarily a lot lower as these things unwind and a lot of stuff is dumped on the market, because these ETFs do contain a lot of physical silver. There are people who follow and monitor the vaults, and they can actually follow bars that move from the Perth Mint to the ETF to the LME or whatever. They can actually follow these bars, and there is physical silver in there doing stuff. But anyhow, so going back is, look at these companies are in these banks are in the business of making money. So they are doing this for a profit. They're not a charity organization creating ETFs. So looking at the volume is, for the first few years of the GLD and SLD, the volume was here, right? And like now the volume's here. So if they're making money here and it's here, then they probably don't have any reason to get rid of them right now unless I'm missing something. Of course, it was like this a few years ago, but if the volume's here and it's right here, you know, the volume can increase and they could still be here, unless there's another reason involved. But I'm just saying that in this market, these other things are in there. And if you look at the other precious metals, right, platinum and palladium bullion are much less widely held than gold and silver, and they didn't move much. Rhodium, which really has almost no bullion, didn't move at all. From my perspective, if you look at precious metals, gold and silver are the metals that are easy to speculate on, and then it gets harder with platinum, palladium, and rhodium, and those prices haven't moved around as much lately. So is that part of it, or is it really part of it that it's more of the gold-oil relationship? Or is it really, actually it's many things. The market is an aggregate of many things. And right now, these things went down today. So this is the longest video I've ever did, and I'm going to see if it works. It's over 11 minutes. Let's see if it works. So I think I want to summarize on is where can it go? Well, it can go lower. I mean, it can go to 12. I mean, if the right things happen, it can go to 6.5. Or this could be the floor. It's one of those things where there are many factors in the world. Someone had said something about they're saying that in India there's going to be a huge ramp up of solar power, and it's going to use a big chunk of the world's supply. And in my opinion, right, if that's going to happen, you are going to see a big move up on silver. And then later, the headlines come out, because what happens is when that happens and it's being planned, the people on the inside or who know more, they hit the information first, and then they make their bets, and it goes out to the people who are more informed. Like a lot of these big hedge funds, right? They spend millions of dollars on research trying to find this stuff out, and they get to this stuff first. So what I'm saying with silver is, like, when people say it's going to 6.5, well, what they mean is with the current factors, if they don't change, and these things happen and stay in progress, and so on and so forth, 6.5. But of course, tomorrow's a new day, right? So we have these projections, and these projections are based on some things, and if other stuff gets put in the mix, then the projections change. But now, at this point, I think you have enough to go on, is that, man, the sentiment is harsh. I'm still waiting for Cramer's gold, silver hate speech, because he gave his love speech when silver was in the high 40s. He actually had a little toy gold and silver bull saying it should be a part of his portfolio. When it peaked, he had a show on Mad Money. So when Cramer has his show where he's absolutely ripping the metals apart, maybe that's a better sign for the floor. But it's not always 100%. But like, Cramer's now saying how Bernanke's this genius and he's flawless and whatever. And that's actually, it's often, but not always, a great contrarian indicator, because when silver was 49 and it started falling, and Yahoo Finance said the silver bubble is popping, that wasn't a floor. It kept going down, and it now hit 15 today. So you got to be careful with these contrarian indicators. So thanks a lot, and be well.